Good afternoon, ladies and gentlemen. It's Modern Investing on IBM TV. My name is Sasha Star, and I would like to introduce our special panel, Nick Palevida, the founder of IBM TV Network, and our contributor, great investor, and Peter Ben. Please welcome to the
Hi.
show. How are you, Peter? Okay. So this is about the market. Market is actually very jittery right now. It was down 3 of 4 of last 4 days, and today it's about Dow Jones is about minus 300 points so far, and so it's very difficult to navigate this market because before, even a few months ago, you could buy almost any stock. So one stock would go up 5%, another one 3.5%, and most of them 4%. So you didn't really care much. But remember, it's not a stock market; it's the market of stocks. So you have to be very selective, and preservation of capital is number one priority for investors, like all three of us, right? Peter, what's your take on the market?
Well, first of all, the S&P, even though it's down today, hit an all-time high yesterday.
Yes,
And
that's right.
the reason is, despite the fears, which I think I'll address in a minute, but the thing is, Treasury rates keep going down, and I just looked at them today, and they've been going down since March, basically. And I had originally, bought a long-term Treasury at 2.2%, and I wound up selling it at a nice profit. Now I would have made a bigger profit because, rates have been going down. So the 10-year Treasury is at 1.19%. And the 30-year, you can go 30 years and get 1.85% today. And it goes down week by week almost. So, and aside from that, which is very interesting, is I think we've hit a point where the investors have said, well, I can't take this. Most investors say, I can't live with 1%, especially taxable if they're in a taxable account, and I don't want to go 30 years. So now if rates keep going down, I don't think it's going to stimulate the market as much, because I think what's going to happen is basically people are going to say 2/3% taxable or 1%, I don't want to live with it. But that said, what will increase the market over time, but it's going to be a long process, is earnings will grow and the companies will keep evolving. There's only a few sectors I really, really like. I mean, pipelines I love. Staples I like because I think interest rates are going to zero in 8 years. And that's based on a lot of different factors, government debt and demographics and a 40-year trend. But so the market, though, doesn't know what to do because, first of all, nobody has an alternative. There's all this cash. So I don't think it's going down a lot. And if it goes down, I think people buy into it probably and a lot of people at some point may just say, I'm just not going to sell because there's no place to put the money. The other side is the two things they're worried about is, one, inflation. And I just look a little further out than the market and I say, there's not going to be inflation very likely in a year or two. But first of all, you have tons of workers who are going to come back in September, and the COVID will end. And so there's people who are watching their families. Maybe they can't work because of that. But there's a huge incentive, obviously, which is crazy. The Democrats gave so much money to people to stay home that they don't want to work. And it was ridiculous, but it ends in September. So people will come back to work. And in terms of COVID, you have to look a little further out. The market tends to look 6 months out, but you look 6 months out, a year out. Look, here's an interesting fact. In America, but it's a worldwide crisis, obviously, but in America, 50% of people have received one vaccine. 70% of people have received 2 vaccines. But what they're not counting is people who have had COVID. So those people also have a pretty good immunity. So it's misleading to just say 70%.
Those who remain alive, right?
Well, most of them do.
Some.
The death rate isn't much more than the flu, although it's a very serious disease. There's a lot of side effects for some people, more than the flu, and it's more contagious. So I'm not dismissing it, but I'm just saying it's dishonest to say 50 and 70%, because why don't they tell us the statistics on how many people have had COVID or the vaccine and have a pretty good immunity. If you have either one and you get it again, you're pretty immune. That said, there's still now it's a cycle. The Delta's spreading, people are worried. But you know what? As it spreads, there's going to be herd immunity. The herd immunity is probably 90%. So whenever it is in America, it'll get to herd immunity, and eventually the world will get to herd immunity, either through vaccines or through the uh, you getting it basically. Either way, we're going to be out of this in a year, 6 months. So you just have to look at some businesses that were really hurt, like Royal Caribbean just reported very negative. They went down a lot because they're not recovering. They have a lot of debt. They were really hurt. Hotels, maybe some of them are really hurt. Offices, we've talked about this before. Offices are going to be hurt long term because of the Zoom phenomenon, which was going to happen anyway, but now it's happening now. Huge vacancies around the country. Employees, a lot of people are going to expect their employer to offer them homework or they're going to leave. So in the end, though, this is all very temporary. So, but then I think the market now is going to drift up very slowly because the companies will keep making money, passing on increases. That said, the only sectors I really like, oil and oil pipelines, I love. I can't believe the yields and the returns and the safety and everything. So I increased now again, and maybe I'll get into that later. But besides that, I like technology because we're in the wave of the future. The big companies, Amazon, Google, although I'm out of Google right now, and Nvidia, and
Have you
so
seen lately what the AMG stock does?
AMD,
Advanced
you said,
micro,
or AMC?
AMD, Advanced Micro Devices.
Yeah, what do you think of it?
Oh my
I
God,
just
it's
read a mixed
flying.
opinion. What?
It was last week. It was probably 80 some dollars. It's today almost $120 a share.
Wow,
Yeah,
wow, what a jump!
incredible. Yeah, I bought some calls on AMG, but I sold too soon when it
Wow.
reached 112. I was out. I made good money, but I was out. But today it was almost 120, 119 trading right now. Peter, right? But I have one question to you about COVID-19 because it's also issue which affects the market,
Mm,
and especially with this Delta variant.
mhm.
Let me ask you, okay, let's see you are an average person, unvaccinated. So, in order to everybody get to a herd immunity, so you now have a choice to get it through a vaccine or to get it through actually getting COVID
Oh yeah.
and this way become sort of immunized. What would be your choice?
Well, I made the choice. I mean, clearly, I think people should take the vaccine. You know, I mean, because the vaccine is a controlled, limited amount of the virus. So, you're getting a smaller amount. When you get the COVID, you never know what's going to happen. But that said, whether you get it one way or the other, you've got a high degree of immunity at this point in terms of
Absolutely. I'm not saying
hospitalization.
that vaccine will prevent everything and you'll be
No,
like you will live forever. I mean, you can be hit by a car in 30 minutes. So it's not really protects you from everything, but it protects you from death. Most in
yeah.
many cases, it prevents you from being hospitalized and going through this ventilators and all these horrible things. And so,
Yeah, and
no,
there's a lot of side effects. I hear a lot
a
of
lot of
clinical
stuff. Yeah.
stories. Young people have died, moderately
Mm.
middle-aged people have died, and I should
Yeah.
say, and other people have had permanent or very long side effects from it. It's not like a typical flu. It's very virulent. So,
Absolutely.
yes, people should have the vaccines. It's amazing they haven't. More people aren't, although it's spreading. They say, I can't believe that the FDA hasn't even approved it officially. They're saying it might help. It's a temporary approval, because they're bureaucrats. If Trump was in office, probably they would have approved it by now. But now they can
Mhm.
move, because Trump would have pushed it. But, we got the vaccine, but it's taking them forever to approve it. But even when they approve it, look, there are people who aren't taking it for various reasons. Some people are afraid, or maybe some people think they're not as scared of COVID, or maybe a certain percentage have had it already and they're not counted again. They're not there's you take in America 30%, but then again you have people like Shaquille who said he was waiting in Australia, you know, and in other countries they can't get it. Japan, I'm hoping that travel to Japan in the next year. for a retirement kind of vacation with my wife. But I don't know if it'll be open because they were very slow bureaucratically, just like Australia, to let it in.
Do
It's
you think the
crazy.
Japanese are just too greedy to pay for the vaccines and they decided to ride it out, sort
No,
of?
I don't think it was money. I think they were just bureaucratic. I mean,
Right.
governments. That's a problem with government. Sometimes they help, and so many times they have policies that do more damage than good.
Well,
They
you
should,
mentioned something that Trump knows so much about vaccines and he would definitely succeed if he would be in the office. Of course, he's not in the office, but why not to appoint him as a special advisor on the vaccine matters to present administration? It would be very useful, actually.
well, first they wouldn't talk to him in a million years. Whatever he does, they do the opposite. They open the border up. I mean, everybody knows this now, probably, or maybe not if you don't watch, a variety of
No.
news. But they have the border open. They're letting in 180 something thousand people last month. Eight
Oh my
percent of them have COVID.
God.
That's at a rate of 2 million a year. 8% of COVID, and anybody who turns themselves in, they're not even getting tested or anything, and they're not giving them vaccines. They're just shipping them in buses around the country. So how can Biden say, "Oh, Florida should be wearing masks, but we don't mind letting in 8% of 200,000 people per month and just shipping them all around the country"? And these people have it's the most insane policies. I don't understand how stupid, really ridiculous it is. I mean,
Not only that, it's dangerous policy as well.
yeah, well, of course it's dangerous. I mean, how many people are going to die because somebody came into the country illegally? Not to mention, criminals are making fortunes with open borders. Look, I mean, you can argue how many people should be allowed into the country, and how many of them should be charitable. Should 10% be or 20%? But zero should be terrorists. Zero should be drug dealers. Zero should have fentanyl, and zero should have COVID or be treated, and not just let's just throw the whole thing up and see what happens. I cannot believe there's no rationality, there's no logic to it, and I think it's really going to hurt the Democrats in the election. And
Yes.
and I think it's because they're in a bubble, a media bubble, where maybe the New York Times and the CNN and these very dishonest, reporting sites who have now admitted, some of them, by the way, are arguing that it's okay for them to be slanted in their news reporting. This is the new thing. It used to be considered unethical, but now there's articles coming out in some of these papers saying we can be unethical. We can be not unethical. We can be very slanted in our reporting because we're helping society evolve. That's not what news is about. It's supposed to be independent. Independent, and and give both sides and let people.
But you see, Peter, many announcers are now not treated as news broadcasters, but as entertainers. So
Well, yeah.
if they are entertainers, they can sometimes augment reality to a certain degree, right?
Well, yes, but you know what? There's two types. Look, you could watch a show on, let's say, Fox News, which I like. I mean, I am not all conservative in my views, and I'm not all liberal. But I watch Fox, and I know that they have newscasts, during the day, and those are pretty, both sides. And even at night, they'll have a real conservative and a real liberal debating, or maybe two conservatives and a liberal. But those shows at night, like a Sean Hannity show, which I watch sometimes, he says, I am an opinion show. I am not a news show. Now,
Mm.
the difference is I've never heard that on CNN. They're like news, and not only that, they're broadcasting internationally. So if you're international and you think this is the news, or BBC, this is the most slanted, journalism in the world. And yet, if you're international, you have very limited access, possibly, to information. So it could really slant your view of America, of American politics, of the world, really, because these people, by the standards of 15 years ago, even a Walter Cronkite, who was a little slanted liberal, but by his standards, he would not believe what they say, what they do, how they edit things, how they cut. So, I mean, it's my biggest thing. I hate the slanted journalism, but I think maybe that's why, too, you get this, and it's damaging to the Democratic Party. This is a big point, because you think it's only damaging to the Republicans because they say, okay, they portray everything negative Republican. The Republicans have no arguments, whatever, they insult them, but it's damaging to the Democratic Party because it allows them to do anything and think anything. So then they get more and more extreme. So nobody checks them. So they start getting attitudes like, let's open the border up and let's not worry about COVID, coming across the border, drugs, because, the liberal sources say don't report on it or, whatever. So it's really, we're in the information age, but information can be almost too powerful these days.
Yeah, well, I think I now can appreciate the geographical position of Canada because it doesn't have border with Venezuela, all these countries, Mexico and others. And also the climate is colder in Canada, and I don't think these people wouldn't want even to go to Canada.
Except for Vancouver.
Except Vancouver, yeah. But still, even Vancouver, it's not Florida, it's not Texas.
Well, actually, I had a Canadian client who said Vancouver is the Florida of Canada.
Yeah,
And
absolutely.
my brother lives in Seattle, and he's probably moving to Vancouver.
No, Vancouver is fantastic.
It has nice climate.
Many times.
It has a nice moderate climate all year, and it's probably a little less rainy even than Seattle. And
yes.
But you know what? My brother, this is typical. It's amazing what he has to go through to even get dual citizenship or into Canada.
Yeah,
I mean, he has to take tests. He has to prove that he's going to be a productive citizen. He has to put up the ways you get in are very restrictive. You have to put in millions of dollars to show you have a business, or you have to prove that you have, gainful employment. They're very strict. And then you have to take a difficult citizenship test that he said was not easy. His wife really had to struggle, to get ready for it. I mean, and then there's long time delays. In the U.S., it's like you could be a terrorist and walk over the border tomorrow, no problem, on the southern border. It's crazy, and they've already caught, by the way, at least 10 terrorists, and who knows how many got in. And one terrorist can do a lot of damage, or 100 can,
absolutely.
And maybe 100 got in already, and maybe eventually, they could do a lot of damage. I mean, one terrorist could.
Especially if this terrorist is unvaccinated, which is most likely.
Well, that's true too. They could just spread COVID all over the place if you want. Yeah, that's
okay. Let's take a commercial break before our next part of the show. Let's see what we have today available, if anything. Not sure. Nick is not here. So, okay. Let's keep going, right, into our next segment.
Okay, no problem.
Actually, once I was preparing today's show, and with this IPO of Robinhood, which opened at, remember, 38 was IPO price, went down to 35, and today it was $70 a share.
Yeah, I heard that.
62 or so. I became very interested in the mechanism what they use, which is a SPAC, which is a special purpose acquisition vehicle corporation. And I was trying to read a little bit here and there, and all of a sudden yesterday I stumbled in the latest issue of Harvard Business Review. Okay, and it has a special article, several pages of this special. Oh, sorry, I don't think you can see it. Okay, this is several pages. The name is. Hold on, let's have a difficulty. Okay.
You can't see much. I can see just a little bit. Oh, it's about the SPACs. Yeah, I see that.
Okay.
Okay.
There are several pages. I read, of course, all of it, and it's actually gives very, very interesting picture of what it is, how it's organized, the process at glance, like all steps, what required. First, you announce creation of a SPAC, and you have founders. Normally, it's some people from hedge funds, mutual funds, and other institutional investors mostly, and they create that. Now, what they have to do, of course, they have to finance the legal fees, accountings, and all this stuff. So it may run into hundreds of thousands of dollars by the time it's all done, but they can pay it partially, not all put together, and then they're getting investors. Now, investors are also their friends from the fund industry and so on. Now, once it's all done, they take SPAC public, which is much easier, faster, and cheaper than if you take public a real company.
Right.
It's a very
Yes,
long
exactly.
approval. So
Yeah, that's what I was going to say.
because there is nothing they have to show. They should have to show the directors, officers of the company, how much money you put into it, and it's approved. I never heard that it wouldn't be approved. I mean, because there is nothing to check. Everything basically, it's a bank account. Really, that's all what it is.
Well, exactly. Initially, yeah.
Initially, it's a bank account. So
Right.
then you identify the target. Now, of course, in Harvard Business Journal, they are not going to announce it, but from my own experience, I know that very often these corporations, because in Canada we have similar structure of CPC, so-called capital pool company, but they're different in the way that Spark can raise tens of millions of dollars. Now, CPC in Canada, the maximum is $5 million. So it's basically geared to a smaller target company, a smaller deals, or so on. But again, again, it's just as easy to organize in Canada as SPAC in the US. So this is called CPC. Then they raise additional funds once they identify the target. So what I was trying to say is that very often they organize this company while already having target company in mind for which they're going to acquire. I wouldn't say that it's illegal, but in all prospectus material which I read, normally they don't even mention that. But it's one thing when you
They don't
put
mention what, the target?
that they already know what is the
Oh,
target company.
right.
Because supposedly it's supposed to be like Canadian rules are saying that you have mind-like executives who put a little bit of money, say $100,000 or so. You organize a company, you raise money from investors, minority investors, and then you start to look for the target. But in reality, more often than not, they already know the target company even before they started to put CPC. But again, that's a way of doing business. Then they raise once they already have a target company, they raise additional funds, so then negotiate the deal with the target company.
But in the end, I mean, this is very speculative because, I mean, it's even a new level of speculation because unless you really love the investor, I mean, you're giving your money away, which I don't want to give control of my money away. I don't even use a lot of mutual funds, although I use some, but very few, because I want to control what where my money's going. But here they could put it in anything. They could change their mind. They can. So I don't know what the performance of the SPACs is, but it's all part of this, airy fairy kind of movement. And first of all, the regulations on the SPACs may get more severe, but also I don't see how anybody, unless you really know the manager and really have a lot of confidence, for somebody to just say, okay, I'm going to just do this SPAC, or maybe he had success before. A lot of times the people who have had big successes then have big failures. Kathy Wood was number one, and my friend said last year, and my friend said, earlier in the year, maybe should I put some money with him because I give him some advice? They said no, because sometimes the best manager is the worst manager. Now I don't know what she's down, 30% or 40, whatever. I don't know. I wouldn't be quoted on that until I look. But she lost a lot of money for a while.
But
And
Peter, I looked at the stocks which your ARC fund owns. They're all highly speculative stocks.
Well, yeah, that's also how you make money in the finance business. You know what? You go, and especially the perfect model. You have three funds, like three SPACs. Let's say you have three SPACs. You put them in all very speculative things. One gets 0, one gets 100%, and one gets 2%. So then you say, look, I'm the guy, number one got 100%. I was the manager of number one. So now give me some more money for my next SPAC. They don't mention the 2 and 3. Just like a lot of these funds, they could, if they have 100 funds, a big fund provider. I'll pick Fidelity. I think Fidelity is a good company, or Vanguard or whatever. I think they're a good
Of
company.
course.
But you know what? If they have 100 funds or 200 funds, then they can advertise. They're allowed to say, well, if I was the SEC, I might say, maybe you should say your average fund in your, performance in your portfolio, but they say, no, in this category. So we outperformed in growth, or we outperformed in international bonds, or whatever. And then, so out of all these 100 funds, you're going to have some winners and losers. So
Well, the best
it,
longer fund is obviously S&P fund because it mirrors S&P and can
well,
do
it depends on
just
which
as
Vanguard fund they have
yeah.
100, they have 100 funds or whatever, but I'm just saying that by having a lot of SPACs, and being very speculative. Look, in MBA school, you learn, and at NYU, I learned one of the major things that I heard many times is there's a risk reward ratio. And basically,
Absolutely.
if you make a chart, you go like that, you go, the potential performance goes up, the risk goes up, because nobody can get 100% guaranteed. So you can put it in these days, a treasury for 10 years and get 1.2% guaranteed. But if you want to take anything more risk, you have to move up the scale, and then you move up, to different levels. And the hedge funds, the SPACs, a lot of these hedge funds, and that's another thing. I think the hedge funds, a lot of them didn't do well. So now this is like the new variation. It's like, okay, we can't sell hedge funds anymore. Now let's do SPACs, because a lot of people got burned by hedge funds, and some people made a lot of money too. But maybe over time too many people got burned, and now it's like, oh, let's do SPACs now. It's the same basic concept. We can take a lot of risk, and you might get rewarded, and you might lose every dollar you put in.
But you
So,
see, in a game of SPACs, what's interesting here is the way it's structured. That first of all, investors are getting on the ground floor, and the shares are starting trading publicly even before the acquisition really finalized.
yeah.
So once they're trading publicly, then you are first of all you are liquid. Second of all, they can go much higher or much lower, whatever. But normally they don't go below a certain price, which is let's say $10 a share, right? So you already have liquidity. Second of all, the majority of public, they're buying in already at the announced acquisition combined equity
Yeah,
price.
it's a hedge
So
fund with even less knowledge, because you don't even know what they're in initially. So the
also
whole
what I
idea,
noticed, Peter, people are not aware that all the early investors, beside the fund, the
yeah,
shares, they're also given the warrants, which allows them to buy even more shares at the predetermined price, which public obviously don't get. So
oh
let's
yeah,
see,
that's true.
someone
Yeah,
is paying $10 a share, getting warrant, allow him to buy, say, at 11 and a half, even more shares. Public is buying at $38 a share. Okay, so there is a
right.
great
Yeah,
inequality.
of course, and just like the
Oh,
hedge funds, the
furthermore,
hedge funds had it like, oh, well, if we get, we'll take a big cut, but if we do well, we'll take a huge cut. It's like, these people are not, they're, and I don't blame them. They create
of
financial
course.
vehicles, and it benefits themselves in many ways, and it may or may not benefit the investor. But it's not my style. It's not your style. I mean, look, when you if you
No,
sell
no,
an
Peter,
option,
wait a sec.
what?
If there is a game which is heavily tilted toward one side, which is organizers of SPAC, and here we have average investors, which are coming at the late stage at $38 a share. So the game is heavily favored into the first group, which is getting right on the ground floor, especially founders who are
Sure,
basically
no
the.
doubt about it.
So then I decided that if I'm against participating at the late stage and buying shares at $38 a share, I'm not going to do that. But what if I will put myself in shoes of an organizer of a
That's
SPAC,
okay.
or in Canada,
I don't.
a
If
company?
you want to organize this back, but then you have to. You see, just like the hedge funds, you have to have some credibility. You have to prove your track
Absolutely.
record, or you have to. And you probably have a great record. I have a very good track record, but one time somebody approached me to say, "Oh, maybe we should do a hedge fund." But he said, "Then what's your performance?" I said, "Well, I take money in and out of all my accounts all the time. I spend money, I move money. I don't have like a clean sheet of of performance where I could say, okay, this all money went into the fund and it stayed there and it grew to this and this and this because I have different accounts and and I have expenses and whatever. So, but you need to prove it. And also this is the big name guy. So you say, oh, I'm a big name guy, and I had this hedge fund, maybe at 10 hedge funds, by the way. And he's going to say, oh, I can just sell you because I did so great on this one. Again, some of these people, who have done so well, then they do manage funds and even well, I could go specific, but I don't know how he's done lately. But one of the guys who predicted the mortgage market, and I had seen at some point, and he was way ahead. He made a fortune, but then he did
Yes.
a fund, and he wasn't doing so well. I don't know how he's doing today, but for a while he wasn't doing well at all, from what I was seeing for the performance of a certain period, whatever it was. But and again, he may have done well, so I don't want to say too much about that. But I'm just saying you can do very well by gambling, by becoming more speculative because you move up that spectrum. But then maybe you establish a record, and maybe it was luck, but maybe then you can use it to sell and get more money. Look at Madoff. That's a perfect
Yes.
example. I mean,
It's a
look,
good
I'm doing
example.
great. I'm doing great. He sucks in all this money. I mean, the only things he was totally lying about his performance, but it's the same concept, of the person who does well, everybody thinks gets greedy, and I mean, but you can do very well with our approaches, which is basically selling options, because as you said, for 50 years, roughly, only 1 year did the buyers of options outperform the sellers of options because
1987.
so you become the casino when you're the seller of options. Or if you buy very selected dividend stocks and let it grow because the evidence is very clear over every study. I've seen 100-year studies, 30-year studies, 10-year studies. And the dividend stocks in the end outperform, dividend growers particularly outperform the stable dividends, and the ones who pay any dividends tend to outperform the ones who don't pay dividends, and the ones who reduce dividends do very badly. So people like the cash flow, and there's a lot of reasons for that. I mean, if you have a dividend stock, one, you're guaranteed eventually to get your money back. It's like duration in bonds. People look at how long will it take to get my money back. But if you have a zero dividend, then it can take a lifetime and you never may see the money back. But and also the dividend, people like to not have to sell their stock. They can live on it, and especially if you get a dividend grower, it indicates that the company's making more money. So a dividend track record tells you that the company has been having good cash flows, good performance. If they don't have anything, then maybe the stock went up for other reasons. So
Mhm.
I think our approach is a lot better than SPACs for most people.
Unless you organize your own SPAC,
Right.
then
Yeah,
you are on
maybe
the
we
top
should
of the hill.
organize our own SPAC, and then we
Yeah.
could sell Bitcoins. Why don't we organize a SPAC to buy Bitcoin, and then it's like double whammy,
Mm.
double speculation. I'm joking.
No,
That'd
no,
be
no.
the last
Listen,
SPAC I would do.
no. Look. I'm working on this article in Harvard Business Journal, and I see a lot of advantages to organize, not to invest in the SPAC, but organize one.
Right. Well,
This
you know
is
what? If you really want to do it, the only sector that I really love, I've said, is pipelines, oil pipelines.
Mhm.
As a matter of fact, I've increased my pipelines again
Yeah,
and it
absolutely.
worries me a little bit because now I'm 25% pipelines,
Mhm.
but I went up to 10% MPLX, 3% EPD, 5% USAC. They make the motors that push natural gas.
Very good.
1%
Very
AM and 6% TRP, and also TR. And I looked at all their performances, by the way, on these companies, these five, because they've all reported now as of today. They've all reported basically, and they're all very healthy. I mean, these are steady Eddie businesses because they have long-term contracts. They're regulated, a lot of their pipelines by FERC, which means they're guaranteed increases. People need natural gas more than ever. They're shipping natural gas more around the world. The projections are for growth. The world needs natural gas and even oil because they're depending on, coal is going away and nuclear isn't very popular. And also, I read today or this week that 3 billion people don't even have access to clean energy to cook, and petrochemical type things like plastic and everything. So as the world grows, population, everything, even if they phase in more solar, it's not going to replace it, and it may not be smooth at all with solar because look,
And
you
don't
get
forget that there is a very high barrier of entry because let's see if a company like Enbridge, which I own,
yeah,
and they have certain pipelines, there is no competition that can say, okay, why
yeah.
don't we build another pipeline and we'll compete with Enbridge? It's impossible.
No, nobody's going to do
Simple.
that, and nobody's going to
No.
approve it. And now it's even hard to get a pipeline approvals. Although a lot of these companies are still growing because they have projects ongoing and they get approvals, but they have to fight harder and harder. But yeah, these are utilities and safety, I think, and but yet they yield 6% and growing very rapidly to 13%, and so you get your money back very quickly. Uh,
Absolutely.
with the MLPs, you get it back in tax-free form, basically. But you can only have a limited amount in an IRA, or you have to pay some tax on it there. And in terms of TRP, I keep it in an IRA to avoid the 15% Canadian tax. As a matter of fact, I moved all my TRP to a Roth. It's like my biggest investment in my Roth now. Because you know what? Right now, I get 6%. I think it's doubled its dividend from 2000 to 2010, doubled it from 2010 to 2020. They've already said we're going to keep growing our dividend from 5 to 7%. And they could easily do that, easily with their cash flows.
Because their income also grows and
Right.
revenue.
That's right. So if I'm
So
getting 6% now, maybe in 20 years I'm getting 25%, on the cash flow alone and the appreciation. But that way, then I can use that in my Roth to buy other things. So I love TRP. I mean, in some ways, I think it's the safest. It supplies 25% of the natural gas to the U.S., Canada, and Mexico. It just made a deal with Mexico to do something else, and it's working on carbon sequestration project with Bambina pipeline, where that could be a whole new business because they're going to need pipelines to pump the carbon. And so that's another use for pipelines that is just beginning to be explored, where if they do sequestration, which is to remove the carbon out of the processes of oil and gas exploration, to be more energy efficient, then, less polluting, I should say, then they're gonna have to pipe that too. So that's another whole business. And they're in the forefront of, working on a project. They have a big project. So I mean, everywhere the news is good on that company, and all the companies look very solid to me. I just
Peter,
worry about the 25% a little bit because it's getting a little high. I can't
I
go much higher.
totally agree with you that energy is a very, very healthy
Yeah, the
aspect of the
pipelines.
market. But there are two other, in my opinion, issues that people have to have in mind. What people really need in their everyday's life?
Mhm.
It's food and place to stay, the housing.
And fuel.
So
And fuel. you
the
need to heat
fuel,
your.
exactly. Well,
You need
fuel,
to heat your fuel and transportation.
absolutely. So we
Yeah,
agree on fuel.
yeah.
Food is goes without saying they need, so that's why a company like Costco or Target and Walmart's and they're
Well,
all doing.
yeah, no, absolutely. Food is, look, that's one of the few places I like too. I like consumer
Exactly.
staples. On a side note, I sold P&G just today, finished it up. I made a nice profit on it. I
Mhm.
sold Village Supermarkets too with a nice profit. They had been yielding 4% and 3%, and now it's a bit lower for PG. But you know why? Because in the end, I have 10% in RHS, which is an Invesco fund, and
Mhm.
they have P&G as one of 33. But what I love about it is it's equal weight. And even though I like P&G, probably going to be outperforming. Some people say it won't perform. But now you have 33 different companies: Costco, Walmart,
Absolutely.
uh, food companies, Estee Lauder, all basically consumer staples. Almost all a lot of food. Pepsi, Coke. So,
Do they pay dividends?
well, the fund itself,
The
well, the
fund.
stocks, its yield is 2% because it takes almost a half a percent maybe on the commissions, but
Mhm.
on the fees. But the underlying stocks are paying 2.5, but then you get two. But you know
Yeah,
what?
but some
I'll take
costs are like paying very little
But I like
dividends.
to because I like their selection. Of all the 33 companies they picked, I like every one. If I was going to buy another one, I could look at any of them and say, I like Costco. It doesn't pay great dividend, but it's a nice mix. And even the ones I didn't like, I wasn't so sure about Pepsi and Coke, but they're doing very well too.
Yeah.
So I said, you know what? I'm not going to bet on P&G. The thing is, everybody knows who P&G is. So everybody's evaluated it. It's like casino where everybody knows red or black is 50-50, or a horse race where everybody knows the exact odds. So you're not going to get a big arbitrage. So I said, you know what? I'll just stay with 10% RHS, because I do find these other companies. I won't. I'll talk about one. When we get to the dividends, but a company like Oil Dry, they make sorbents. Now they pay a 4%. I think it's a 4% dividend. They're growing steadily for decades. Nobody knows who they are, but there's the sorbents are used in kitty litter and things like that. But it's very steady businesses. They've always growing, low debt. And like the one I'll talk about a little later, I found another one I put 0.5% in. So I decided, okay, P&G is probably a winner, but just to get off. But what do you think, by the way? I'll ask you your opinion. Now I am 25% of these pipelines. I did on one side, let me tell you, I did the 10 reasons the other day why I love them. The fact they're regulated, the fact they have long-term things, the fact that all of them are covering their cash flows, many of them by almost double. Like an MPLX is covering its 10% dividend with cash flows of 1.7%. That means it's getting about a 17% cash flow return, which is really, in the end, that cash can be used to increase dividends, to pay back stock. You look at EPD, it's got a 12% cash flow return. AM, it's got I think it's 12% cash flow return too, and it's paying 9. TRP, very nice return too, and they're pay 6, but they doesn't matter if they're getting these huge returns. That's really what they're making on these pipelines. This doesn't take that much to maintain them. But now I'm 25%. First of all, I don't think I'll go any higher, because now it's starting to worry me, because as much as I believe in the industry, and by the way, the industry, the thought, I guess, of some people is, oh, solar is going to replace it, everything. I don't think solar is going to touch natural gas for 20 to 30 years. But you think 25% is too much?
Uh, Peter, what can I say?
Hard
When
to
I
say.
was much younger,
Yeah.
I invested 100% of everything what I had at the time in one penny stock trading on Vancouver Stock Exchange.
Wow.
It went up from 50 cents in 5 months to $4.70.
Wow.
And my average price was $1.25. When it reached 4.50, 4.70, I liquidated half of my position.
That was smart. That was smart.
It was smart, but it was 1 year before the crash.
Oh.
And believe it or not, stock stayed for almost all year before the crash. It stayed at around 350, 375. So I sold a little bit more shares. Then it went down after the crash, it went down to $1.25 or so on. And then it's merged with another company, but it's already a different story, because then I was participating in financing that company. I became director of the merge company and so on.
Oh.
And I've made a lot of money, really, hundreds of thousands of dollars. In
Nice.
Wow. Yeah, a matter of a few months, 3-4 months since I started investing. I remember a good friend of mine. I told him when stock was like $75, maybe. I told him about this, and it's an interesting opportunity. And he declined to invest. And you know what was the reason he told me?
What?
He said that, look, money is not an issue. Okay, so I'll make another $1,000, or I may lose. See, my problem is this: if I will invest, and let's say I'll make $1,000, okay, it's good news. Why not? And so on. But if I will lose even $100, there is no measurement of a sorrow that I will have.
Yeah. People hate to lose money.
Yeah, I just can't stomach it. I will think, what a fool I am, what an idiot I am. So, you know what's the end of this story? When stock was already over $3, $3.50, so finally at $3.75 he bought shares.
Oh no.
Why he bought his shares? Because at that time, all my friends knew about the story, and his wife started to scream at him, what an idiot he is.
Oh no.
He can't buy the stock, he must go and buy a stock. Anyway, he bought at $3.75. and I don't, but I don't think that he bought a lot of shares, maybe a couple of thousand or whatever.
Right.
So it's not an issue. I don't know even at what time he got out of it. He made some money or he lost some money. He never told me, and I felt kind of uneasy to ask him really. So now I have another friend of mine who knew about it. So he was buying, let's see, at 60 cents. He started to buy, sold at 68, bought at 75, sold at 85, bought at
That's right.
25, sold at 35. So he was making a little money on its way up. But first of all, of course, he didn't buy a lot of shares. So he was making a little bit of money here and there. But again, it's another strategy, not. Uh,
Right. Yeah, there's different strategies, obviously, for the market. But do you think 25% is, I mean, look, I could
I
have
think it's
less.
just fine. I would even go as high as 30, maybe
No,
33%.
I won't go
Because,
much higher because I don't need
but
the risk.
35 is very healthy
I
figure
think it's
because
very safe. I mean, I don't think there's any danger because these are utilities, to my view. Again, natural gas, and you get your money back in 5, 8 years, whatever, 10 years,
but
depending on.
there is a psychological problem. Let's say you decided to decrease to 20%. Okay, so you will
Right,
save 5%. Okay,
right.
and what you are going to do with this money?
Well, that's the problem. I can put it in American Express at 0.4% taxable because I have some muni bonds. I am
Mhm.
about 50% in just bonds. Mainly, luckily, I locked in 2% muni bonds. When I saw the much earlier, like last year. So, and now, but you can't even buy those muni bonds maybe because they're like full state muni bonds in safe states. But if you can get them at all, but now when you go in the muni bond market, you look at 0.5%, 0.7% to go 10 years out, 8 years, whatever you get, and or a CD. There's something called brokered CDs, which is very nice. A lot of people don't realize that. So you can still get a 10-year CD, but a Goldman Sachs 10-year CD or a Citibank Chase, whatever, maybe you get 1.5%. So after tax, you get 1%. It's a long time to invest at 1% taxable. You're not keeping up with inflation. Which is the problem I think society is going to face now going forward, which is once it sort of moved everything forward with all the money printing and the inflation, everything. So I think we're in a permanent and declining interest rate environment. So many countries around the world, it's already negative. So how do you make money? Okay, fine. How do you keep up with inflation? How does anybody keep up with it? So, in a way, it eats away at a lot of people because let's say you're a retiree. There's so many retirees around the world. It's like, okay, well, my expenses are going up 2% and my income's going up one. Let's say, if you want to keep it safe and or whatever. But then you're not really growing anymore, and now you have to cut back expenses because you have to live, and people don't like risk anyway. So I mean, we have a society where people are going to retire. So I don't think there's going to be inflation in our life. I'm sorry, let me rephrase. I think there's going to be moderate inflation, maybe 2-3% in the long run, whatever it is, and especially in certain areas, like housing, because interest rates are probably going to keep going down, but rents will go up and other things will go up, and so it'll eat away at that's what happens when the society ages. People have to spend money because they've been
Peter,
making
there
money.
is one issue which I would like to have your opinion on because I can't figure out how it works. And it's related to a stock market, of course, because right now there is an issue of um, eviction people from their
I know.
houses, which is coming up in the next few weeks.
Mhm.
And yet, as we know, people got a lot of money for just sitting at home.
I know.
So why the same people who are getting all these checks cannot pay the rent? Does it work?
Well, this is an example again of government just not knowing what they're doing. I mean, they see some benefits. Oh, let's help people because of COVID. Except for you have very wealthy people who are not paying the rent too, and you have landlords who aren't collecting rent, who maybe are the person who's struggling. You might have a richer person who's the renter in some houses than the landlord who's cannot now make his mortgage payments or his pay his utilities, whatever, or pay his own home mortgage. So the thing is, government very rarely thinks things out well. You look at so many policies. You look at, welfare is supposed to help people who are poor. And I'm not opposed to welfare, and maybe, but they don't think it out well. So instead, they create, many people who say, okay, now I'll have a lot of children to have welfare, or I won't work to have welfare, or I'll, leave my wife and, she can collect welfare. And then the wife's like, okay, I'll be okay if I'm alone because I can collect welfare. So there's a lot of side effects. And again, I think there needs to be a safety net. I'm not saying no, but they don't look at it. A perfect example, by the way, is the projects. The government built a lot of projects around the country, and it turned out a lot of them turned out to be real havens for poverty and drugs and everything, because they don't think things out well. Because there's a lot of different incentives for government. Government, first of all, you have bureaucrats who maybe don't have a lot of business experience, but also their incentives are to be popular, not to necessarily do the right thing. So it's crazy what they're doing. And, and this policy is also a little insane. Look, if they wanted to do it, why didn't they say, okay, there's a moratorium on rents, evictions, if your rent is under $1,000 or under $500 or
Okay.
under, but instead they're like, everybody gets a rent eviction, moratorium. But now I think the Supreme Court said it was illegal, and now they're trying a new one, which is to say, but even Biden himself said he doesn't think it's going to pass the Constitution, but they get a delay of a few more weeks. But I think the U.S. Supreme Court is not going to say that. It's a taking by government of the property of a landlord for, and it's not even makes sense again, because a lot of these people maybe could pay their rent, or maybe who knows why. And I understand they want to help people, but again, maybe they could have said, okay, $500 rent. But if you're paying $2,000 a month rent, then you can afford to pay the rent, or you can move. So, and so it's just an example of where
I don't
government.
know. You see, it's so controversial issue because let's see, if you're a renter,
Mhm.
by passing this law, in fact, you encourage people stop paying their rents. You
Yeah.
cannot
Oh,
be
absolutely.
evicted, right? So you can stay for a month in a
Yeah.
nice, comfortable apartment or house or whatever you have, and stop paying rent. You accumulate, you build up your cash reserves, your bank account goes rich. You can start investing in stocks, you can do options, you can do so many different things. And in the
Yeah.
meantime, there is erosion of market value of the property because
Right.
the person,
Right, and as you said, maybe the landlord can't pay his rent, or
absolutely,
and
absolutely.
or mortgage, and maybe he's getting evicted. Whatever. But it's a perfect example. All these are of government, and this is why socialism and communism don't work, because you can't give that much power to the government and think they won't take more, and then they take more, and then they take more, and then they do things that don't make sense. So we're gonna. I think the things in the United States, I think things will swing back very heavily in the next couple of elections. And maybe we should get to some dividend stock or two, just because
Yes, let's try dividend stocks. So next week we will talk more about options. We didn't really say anything
yeah, we
today,
didn't even hit
but
those. I made
you
it.
know,
I made some moves in
the
options,
the
but
options is probably it's almost comparable to pipelines in a way.
I think
It's-
so, especially if
it's-
you sell. I mean, I love to sell long
right.
options like 23,
Hmm.
2023, and then if it doesn't go up, I could do it again for the rest of my life, keep the cash, and
Absolutely.
meanwhile, eventually these companies are going to grow into the price. So it's a great strategy. My pick for the day, aside from RHS, which I moved up to 10%, because again, I love the Invesco. I think they pick nice companies. I'll take 2% lifetime growing. These companies are doing very well. A lot of them have reported very strong growth, and they're always steady eddies. They raise their prices a little bit, they expand, they work hard, these
Absolutely.
people. So I went RHS 10, and I did get rid of P&G and VLGA. I'm really torn on because it's got 4% dividend. It's really solid, but it's not growing too quickly in terms of its dividend. But it's a nice safe supermarket. But I got out of there too. I'll look at that. But so my pick this week, which went up about 8 or 10% in the last week. So I wish I mentioned it last week, but I still like it a lot. It's called Gatfelter. It's not a well-known company. I put 0.5% in there. It's GLT. It pays a 4% dividend,
Hmm.
and it does fiber engineered materials. What does
Hmm.
that mean? It's basically paper products that are engineered to be stronger. So, you have tea and coffee filters, you have dusters, you have healthcare products like masks and medical apparel. Very steady company. You know, their price over cash flow is 9. So basically, they're earning 11 times, around 10 times. So they're really earning 10% cash flow. They have debt of 0.24 to assets, which is very low. But they just did a few deals too, where they bought other engineering companies. I think they bought some from Georgia Pacific and another company because they have all this cash flow. That's the beauty of cash flow. So these are, again, great track record of steady revenue growth. A lot of companies, it was trading around 15, I think today, 14 when I bought it, but um, the target for the analyst is 17. I mean, it passes all my tests. I do like 10 or 15 tests on
You
every
did
stock.
great,
I have a
great.
system. I look at the cash flow, I look at the analyst, I look at who owns it. I go through a very systematic process.
Do they have options?
I don't know that, but they probably do. It's a
Yeah,
pretty
most
big
likely.
company, so you could look at that too, as an options play potentially. But to me, you know what? If it's 4% dividend and they're gonna keep increasing it over time, I don't mind holding it, for life. And it seems like the kind of safe, very safe company. It's like a staple, basically. People aren't
Mhm.
gonna need this stuff, and they're gonna have pricing power, and so it's a good, diversifier between the engine and the bonds and the options and the other things. So I really like GLT, and I almost went 1%, and then I decided to be chicken again. I'm
Good.
a very chicken investor. I hate to lose money. I'm
Uh,
like, yeah,
Preservation of capital. That's the name of the game. I
well, I
still,
know.
I still love Pfizer. It did very well for me, especially last week was spectacular and last
Oh,
days. But now their yield started going down. Now it used to be 4.5, 5%. Now it's probably less than four
yeah.
because stock keep rising. But I'll take it. I'll take it.
Yeah, well, that's it. Eventually, these stocks, that's what
Yeah,
happens. It
but
appreciates.
exactly.
That's what the world is desperate for income. I mean, look, you have 10,000, I don't even know if it's hard now, but it used to be 10,000 people a day retiring. You hit that retirement age, and you had two-thirds of people taking retirement at age 62, by the way. These
Mhm.
people who are retiring at 62 particularly, they probably need the income because they could wait. But so all these people need income, and it's like, well, I used to get a little income from my CDs. Now I can't get any. So there's no alternatives, and so to find safe companies, which I think the only sectors I really like, and maybe healthcare too, but again, it's technology, the energy pipelines, and energy. I don't know what will happen, but the pipelines I love, the consumers and the technology. The safest companies like Amazon and things like that, especially selling options. But and maybe healthcare. That's the one I'm torn on. So, but other than that, I don't like a lot of companies. The financials, the interest rates keep going down. How do they get a return on the money? Plus, there's going to be an office crisis, that is just beginning to hit. So, a medical read, an office read, and the banks, they're going to lose a lot of money on these office buildings ultimately because there's going to be vacancies. Last I looked, New York City was, I think it was in May, they had 20% vacancy. Then they went to, I'm sorry, 20% occupancy. Then they went to 21. And Jamie Dimon comes on yesterday. He says, "Oh, people are going to return to the office. They need to, whatever. Like talking that up." But
Not really. I
no,
mean, half
and
of the people hate it. They don't want to
no,
return to
and
the
you know
office.
what? Here's the thing. This is a permanent change, I think, to a good extent, because now, let's say there's company A, B, and C, and let's say C is Chase, and Chase says we want all our employees in the stock in to come in, but then company A and B says, we'll give you the same money, or a lot of times people will take 5 to 10% cuts. So there's a lot of evidence of that to work in a suburb or even work outside of an expensive city. So Chase is saying, oh, come, we want everybody back. People are coming back, and I'm just saying, I don't know exactly what he's saying, but that seemed to be the gist of it. But then you have another company saying, no, no, we'll pay you the same amount. You can stay home, avoid the commuting costs, maybe not have to commute an hour a day each way, maybe more, not deal with congestion and paying for the train or the car, and have the convenience of being at home. And and maybe work flexible hours, whatever, as long as you're getting your job done. And the productivity studies show that people are just as productive, or
Of
some
course.
argue much more.
Right.
So, because they don't waste time sitting around, or or gabbing, or
Peter,
meetings
I,
that people
I'll
have.
tell you something. You know that I have large option positions in Zoom.
Yeah.
Zoom was 4 or 5 months ago. It was $270 a share. Today it's $380 a share.
Wow, you did well. I wasn't confident in that one,
No,
but
I'm still hanging on to my positions because the
yeah, I
payout
don't know, because they have a lot of competition.
is
That's what.
awesome.
But that's
Uh,
you did
but,
well.
but but a lot of people who adopted Zoom, and Zoom keep developing. They're bringing new options and new stuff to their services and so on. So it's there to stay. It's not something. It's just a kind of a one trick pony that once pandemic will be over, nobody needs Zoom or so on. That's not the case at all.
Mhm.
Zoom is there to stay. It's becoming part of the reality. Yeah, there is competition. Cisco is providing some services and some other companies, but whatever Zoom has, it's there to stay, and
Yeah,
that's why.
they do have a first actor kind of thing. They weren't the first, but they're a leader, so they can now spend money on developing their technology and everything.
Absolutely.
And
Yeah,
it's
they
like
can
sort of
now.
like Google, if you were arguing for it, saying
Mhm.
it's like you say the word, I'm going to Google something, I'm going to Zoom something, it becomes a
Absolutely.
generic word
Yeah.
for it, even though there's competition. So, I'm a chicken investor. I
Oh,
invest.
that's
Yeah,
okay.
I am, at your point. I'm always afraid to lose. So, like, I
But
should have
you'll
gone with
do,
it.
but you'll do well with Nvidia. I'm pretty sure.
Oh yeah, yeah, no doubt
Nvidia
about it.
is,
Although I was we'll cover it next week, but I sold half my even profits in Nvidia, and I know I'm going to regret that. I took big profits. I mean, the options first, I had 600 options at your suggestion, and it was going through 600, and I had very good timing there. And I moved up to 800, and now the stock's at 800, and it was 800. But I had, like, even on those second set of options, and I made money on the first. I made 33% on on the
absolutely.
on the money I took out. But so I couldn't resist, because I have other options. And I said, you know what if everything really tanked, and I started looking at the total risk. And, but I know I assume NVIDIA will probably be well past 800 in 2 years. But I took some
Agreed.
profits, but it never hurts to take profits.
Nobody
But it
became
does
poor.
later when you look at what you could have made. But again, my inclination is, I'm a paranoid investor, and I don't want to lose, and I don't lose
Peter,
much.
we know
Rarely
that the
ever lose.
market is always there. It's there
Yes.
tomorrow and next week, next month, next year. So don't have any regrets because you can
No,
always.
I don't have any regrets overall. So
Absolutely. Okay, Peter, I think we will end our program for today. It was
okay,
great
very
to
good.
have you as always, and see you next week. It
Okay.
was Modern Investing, IBM TV. Bye
Bye-bye.
bye, everybody.
Sasha, I
I
don't
don't
know,
know how to stop that.
because Nick's not paying attention. Oops, this is embarrassing.
Okay, hold on. I'll ask Nguyen if he can do that. Oh, you know what? Why don't we just exit? Okay.
Just
Goodbye,
exit.
everybody.
Oh, here, end broadcast. There's an end broadcast thing here. I don't
Okay.
think they made me director, but I'll just end the broadcast. Maybe that'll end it right there. You can do the same if you
Thank
have.
you.
Bye.
See you.